Welcome to this comprehensive guide on cryptocurrency fundamental analysis. In this video, you'll learn how to properly research and evaluate cryptocurrencies before making investment decisions. Fundamental analysis is a critical skill that helps separate promising projects from potential risks in the crypto market. Fundamental analysis is a method used to evaluate a cryptocurrency's intrinsic value. Unlike technical analysis, which focuses on price charts and patterns, fundamental analysis examines the underlying factors that give a cryptocurrency its real worth. This includes studying the technology behind the project, the team building it, the use case it serves, the tokenomics or token economics, and broader market conditions. The goal is to determine whether a cryptocurrency is undervalued or overvalued compared to its current market price. The first step in fundamental analysis is evaluating the project and its technology. Start by reading the white paper, which is the official document outlining the project's vision, goals, and technical architecture. Next, examine the technology stack, including the type of blockchain it uses, the consensus mechanism like proof of work or proof of stake, and its scalability and security features. Ask yourself, what real-world problem does this cryptocurrency solve, and does it have genuine utility? Finally, check the development activity by visiting platforms like GitHub to see how actively the team is working on the project through code commits and updates. The people behind a cryptocurrency project matter tremendously. Research the core team by looking at the founder's experience, credentials, and track record in the blockchain space. Strong teams with proven expertise are more likely to deliver on their promises. Examine strategic partnerships and collaborations with established companies or institutions, as these indicate credibility and industry connections. Analyze community strength by checking social media presence, the number of active users, and engagement levels across platforms. Finally, evaluate transparency by observing how well the team communicates, whether they provide regular roadmap updates, and how they respond to community concerns. Tokenomics, short for token economics, is crucial to understanding a cryptocurrency's value proposition. First, look at total supply and distribution. This includes the maximum supply, the circulating supply currently available, and how tokens are allocated among the team, early investors, and the community. Next, understand the inflation model, which refers to the emission schedule and how new tokens are released over time. Finally, assess token utility and demand drivers. What can you actually do with the token? Are there burn mechanisms in place that reduce supply over time? These factors significantly impact long-term value. On-chain metrics provide valuable data directly from the blockchain itself. Active addresses refer to the number of unique wallet addresses participating in transactions daily, indicating real usage of the network. Transaction volume shows the total value being transferred on the network over time, reflecting economic activity. Network hash rate measures the computational power securing the blockchain, which is especially important for proof-of-work cryptocurrencies. Token velocity tracks how quickly tokens change hands within the ecosystem. High velocity can indicate active use, while low velocity might suggest holders are keeping their tokens for the long term. Market metrics help you understand a cryptocurrency's position in the broader market. Market capitalization is the total market value, calculated by multiplying the current price by the circulating supply. It's a key indicator of a project's size and relative importance. Trading volume shows the daily trading activity and is a strong indicator of liquidity and investor interest. Liquidity itself refers to how easily you can buy or sell the cryptocurrency without significantly affecting its price. Finally, consider exchange listings. Is the token traded on reputable exchanges? The number and quality of exchanges listing a cryptocurrency often reflects its legitimacy and accessibility. No cryptocurrency exists in isolation. Compare the project against its direct competitors in the same sector or niche to understand its market position. Identify what unique advantages this cryptocurrency offers. Does it have better technology, lower fees, faster transactions, or a stronger community than alternatives, analyze its market share and growth trajectory within its category. Is it gaining ground on competitors, or is it falling behind? Understanding the competitive landscape helps you assess whether a project has long-term viability in an increasingly crowded market. Every cryptocurrency investment carries risks that must be carefully evaluated. Regulatory risk involves potential legal and compliance challenges in different jurisdictions. Governments around the world are still figuring out how to regulate crypto, which creates uncertainty. Security risk includes smart contract vulnerabilities, the history of past hacks, and whether the project has undergone professional security audits. Centralization risk examines token holder concentration. If a small number of wallets hold most of the supply, they can manipulate the price. Also, consider the governance structure and decision-making processes. Finally, market risk encompasses volatility, correlation with the broader cryptocurrency market, and potential liquidity concerns during market downturns. To conduct thorough fundamental analysis, you'll need the right tools and resources. CoinMarketCap and CoinGecko provide comprehensive market data, rankings, and basic project information. They're excellent starting points for any research. Blockchain explorers like Etherscan and BSC Scan allow you to analyze on-chain transactions, wallet addresses, and smart contracts directly. For advanced analytics, platforms like Glassnode and Messari offer in-depth on-chain data and professional research reports. Finally, GitHub is essential for checking developer activity, examining code quality, and tracking project updates. These tools combined give you a complete picture of any cryptocurrency project. Let's recap the essential points. Fundamental analysis requires comprehensive research across multiple dimensions. You cannot rely on just one factor when evaluating a cryptocurrency. Combine qualitative factors like the team's experience and the quality of the technology with quantitative metrics such as on-chain data, tokenomics, and market capitalization. Always assess risks thoroughly and compare the project against its competitors before making any investment decisions. Remember, successful cryptocurrency investing is about understanding the true value and potential of projects, not just following hype or price movements. With these fundamental analysis skills, you're now equipped to make more informed investment choices in the cryptocurrency market.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.